Good morning, everyone, and thank you very much for joining me. This is the DAX Open with myself, Russell Shaw. I'm the Senior Market Specialist at FXCM, and my email address is rshaw@fxcm.com. Today is Tuesday, the 9th of November, 2021. Just going to bring up our high-risk investment warning. I'll keep this on screen for a few moments. And I'll just bring up the commentaries disclaimer. Good morning, Zanette, and nice to have you on the webinar as always. And here's our references of Market Scope 2.0. Let's just go ahead and start from the top and work our way down. So this is the DAX weekly chart. Now, what we've mentioned previously is we've only got 3 out of 4 points that are necessary for trend determination. So we need the pullback. Okay, we need the pullback at some stage, and then the next impulse to really indicate an uptrend. Right now, the most that we can say is that we are not moving down, and we're not really moving up in any sort of conclusive defined trends. That being the case, we may be in for some sort of sideways movement. So just prepare yourselves for that if we don't get the necessary price action for trends. In other words, higher trough followed by higher peak for an uptrend, lower peak followed by lower trough for a downtrend. We see that the stochastic is making its way through towards the 80 level, and of course that is where we want it to be, because the longer that it stays in this 80 level, the more probability we have for a sustained impulse to the upside. But even with a sustained impulse to the upside, you can still see that there are those peaks and troughs that are needed for trend definition. So this over here, I think, is certainly good news. And even if we get some sort of pullback at this stage, I wouldn't be overly bearish until price action dictates that we need to be bearish. Okay, so I think any sort of weakness here is probably an opportunity that we should look at to see if it's exploitable. Now, the next thing I want to talk about is just we've got a very small candle for this week so far. It's only been 1 day of trade, so we've got another 80% in front of us. We've only worked through 20% of the week. So, but you can see there's really nothing happening in this particular range. And if we go through to the hourly here, you can just see exactly what I'm referring to when we just box this. See, when we box it, there's no range here to really make any sort of worthwhile swing. There's no worthwhile swing in terms of a swing trade. There's nothing really there, and that is because we've got this very small candle. Let's just take a look and see how we're sitting on the daily chart. And the daily chart here is in our bullish area. Okay, it is in our bullish area. Just the last 3 days have got some, I guess, some hint of correction in them. Yesterday's candle was an inside day. So an inside day, it's completely within Friday's range. So yesterday was a lousy day on the market. We'll have to see if we get some sort of movement today. In that regard, we do have the stochastic in the bullish area, and now as long as it holds the bullish area, there's always a probability that we do have an impulse. So just keep an eye on the hourly then, because the hourly now does seem to suggest some interesting movement. So let's just examine the the hourly movement. So first of all, the stochastic looks to be crossing over, and the EMAs look to be converging towards a crossover. Those would be the two triggers. Now, even if the triggers are pulled, you see, so over here we had the triggers pulled, over there, and over there, the triggers are pulled, but we had no momentum to work with. We had no momentum to work with. So without that momentum, the triggers are just that, they're triggers. What we need is the market to cooperate, and we need the shorter term traders to start pushing price towards, so to push the stochastic towards that upper quintile and hold. And if it gets to that 80 and it holds at 80, then there's a likelihood that a swing is on. Now, just in terms of the hourly market rhythm, 1, 2, 2, 3, 1, 2, 2, 3, 1, 2, 2, 3, 1, 2, and this is a long 2, 3. And now we want to see if we are going to get a push to the upside. Now, I'll put a question mark here because it depends on effectively two things: the triggers. Okay, so both triggers included in point one. It depends on the triggers. If those triggers get pulled, then it depends on the market cooperating with those triggers and the momentum moving upwards, and the stochastic indicative of that moving to that upper quintile and holding. And that's why there's the question mark there. So the first thing to keep an eye on is those triggers, which look like it could be taking place. Again, just to reiterate, triggers in of themselves are not going to help unless the market cooperates momentum-wise. That being said, you always need to be using a stop loss. You always need to be using money management. Okay. Now, if there's any questions, just go ahead and type those in. Any questions? Go ahead and type those in. Okay, nothing coming through at the moment, so we'll conclude here. And if you need to reach me, just send me an email, rshaw@fxcm.com. Thanks very much, guys, and thanks, Aneta. Thank you very much, and speak to you all soon.